This is Randy Finney with Right Side of the Chart, and today is Monday, January 14th, 2019. This is a second video of the day. First one I just ended up, I intended to cover trade ideas, which I will do in this video, but I had spent a little too much time covering the broad market, so I figured I'd break them up. All right, so just an update, quick update, since I already did that update on the broad markets today. So this is that NQ 60-minute chart, and again, you can see we've had a perfect reaction off that trend line. Let me change my drawing tool here, grab an ellipse, change that color to white, or no, let's do yellow. All right, so there it is. So perfect kiss, and that then validates that. I had said earlier that when you have uptrend lines, especially those start to form off lows. Again, this is just my, how I use technical analysis. I've never read this in a textbook, but to me, you need three reactions on a trend line to help validate it because you can connect any 2 points at random. So that third reaction, at least in my opinion, helps to validate a trend line. And as I said, very often when you put in a major low like we did back on December 24th, you just look for the next reaction low, and you'll almost always get a tag of that trend line more often than not. So there it is. So it's validated, and now the next thing is, do we rally from here or do we break it? I do favor a break, as I maintain. I think we'll come down here probably to at least that 64.70 level, but probably 64.1050ish, give or take. And that could break any time now, or we could rally more. I favor a breakdown soon. I think it'll come this week. A lot of things pointing to that, especially where the broad markets are in many sectors and key stocks on the daily charts, coming up on some pretty big resistance. So that's the near-term outlook. My preferred scenario there. Trend indicator is bearish. Let's go over to the 60-minute chart. Now, SPY. Or ES, I should say. This is ES, the S&P 500 E-minis, still flirting with that trend line. There's the same comparable trend line off the December 24th lows, comes in. So we've been dancing on it all day. You'll see a couple candlestick wicks down below or tails down below it. That doesn't mean much. That's essentially a fall down or a move down to support the trend line, and we've been dancing on it all morning, really, since early morning session. So you want to see, and you'll know when you see it, an impulsive a red candle move down through there. That would trigger short entry if you get a breakdown on NQ as well. As I say, if you jump the gun because you get a breakdown on ES and NQ comes and falls to support, as it did today and bounces, then that's probably going to give you a whipsaw signal. So if you wait for both of those to break convincingly, whether it's an impulsive move intra-period or a 60-minute close below, maybe you get a breakdown, a back test, those would be your next objective shorting entries. And if you're bullish and long and you think the market has a lot more to go before it has another 2-3% correction, then most certainly you could buy on this bounce to pull back to this trend line. It's certainly possible that continues to move higher. As I mentioned before, the divergences, there's plenty of room for another, move up here. Here's my next resistance level. And we still have the 25.94 level right there that we've been stopping cold at for a while. So that's our next resistance. After that, if that pops in 26.27 or so, and that could still give us a divergent high and then give us a correction maybe later in the week or so. All right, so let's move on to trade ideas, and let's start with those official trade ideas that are on the site right now. There's only three. Again, they remain unusually light due to market conditions. I've shared some objective long entries in videos, and I just didn't have time to mark up all the charts and pick my. Well, I showed you my favorites, but then didn't put them on as official trade ideas. But like I said, official, unofficial. If it makes a front page, and when I do those videos, and I wanted to talk about that in this one, when I do those videos, I do my best to differentiate between a trade setup and an actionable trade idea. I'll just pick a random example here on ITB. Back here we had a divergent high, bearish rising wedge pattern. We started to have divergence at this point here, but we kept going up. And so, rising wedge, divergence, all those are not sell signals. What's a sell signal is when you break. You get a sell signal and a break of support, which in this case would be this uptrend line. So, for example, on that one, it was a trade setup up until this point. Then, and I guess wasn't even paying attention here. It was an actual trade. And there was our sell signal, and you can see first target, and those were potential targets I had. I went on to hit the potential fourth target. And likewise, this is now an active trade. I don't know where that red line disappeared. So ITB looks good. We hit our first target. What was it, last week? And we've been consolidating above there since. And a lot like the broad markets, this does somewhat takes the form of a flag, and it is possible the whole nature of a bull flag pattern or a bullish pennant is a period of consolidation, typically on low volume after a sharp move up. That's your flagpole. So maybe it does break out. Maybe it comes all the way up here. I can tell you this would be, even though it's not. Oh, actually, I guess that was the only sole official target. I only had this as potential T2. Looks like I didn't extend that. Sorry, I have a lot of trade ideas always bouncing around my head. But either way, that would be about the measured target right here, and that is a very good support level. Let me just mark that for you in case this rally has a lot more room to run. 37.36. In other words, that's the kind of level where if I'm back into ITB anytime soon, and I can tell you this, maybe I'll pull back here to that former first target level. The actual resistance level is at 32.70. Remember, I set my targets a little below the actual resistance level to avoid missing a fill. So there's one possible scenario that we come back in here, and we've already been consolidating, but maybe we come a little lower, maybe not, and then punch up here, hit that potential second target, and then continue on. And that's where I'd be interested in, quite possibly. I'll have to see what the charts look like when they get there. If ITB gets that high, to put on a swing short for the next leg down. But as of now, I don't see enough in the charts at all to short it. In fact, it's just coming off a pretty powerful divergent low. So, like I said, this may take time. We may be looking at a rally that lasts a couple months, 2, 3, even 3 months or so. Very possible. All right, so there's ITB. I think I said enough on that right now. So if you're still in it and you were going for that potential second target, or if you're looking to re-enter that, you can anywhere, like I said, down to around that 32.70 level with a stop not too far below seems objective. And maybe all the way down here to this 50-day. See that yellow line, the 50-day EMA that's turning up? That's a level that could also act as support, because it has acted as resistance on the way down, and it's done a pretty good job in the past of acting as support and resistance. So you can see all the lines there. So there's another objective level, or at least a stop. Give it a little room. Allow for maybe a 1-day or an intraday pierce of the 50. If you're swinging that high, you're talking nice risk reward. It's only a couple point downside, maybe less than 2 points for several, 5 points or more on the upside. All right, next one up would be, that was ITB. We have KRE, that's the regional bank sector ETF. That one's still active. We hit our first target here, and there was a lot of upside momentum. So what happened here, and the same with the ITB I was just showing you, I set target levels at my price targets at a level I expect a reaction, and that's defined as one of two things or a combination thereof: a consolidation or a pullback against whatever the trend is. So in this case, an uptrend. So now, as I often say, when you have a strong momentum to the upside or downside, you tend to overshoot support and resistance levels. So in this case, that was a momentum-fueled overshoot, and you can see we've been trading sideways since, really right up on and above that level. So we took it out. It was resistance, took it out, but this is still my preferred target on this one, that 50.68 level. And just an FYI, the line is set at 50.73, so I'm kind of getting tight. I'm 5 cents below the actual resistance level, and you can see you also have the 50-day EMA. So I can tell you clearly I will be out of this one. I will close this official trade out if and when T2 is hit. There's pretty significant resistance coming in, and that's it. Trend indicators are still bearish. They're well below the zero line. So as of now, I'm still viewing this as a most likely a bear market rally. If you are of the other mindset that this was a great buying op and an ongoing bull that's headed to new highs soon, then there's nothing wrong with just trailing your stops up as you build some gains on this position, and letting it ride if you think it's going to go up that high. That's certainly a possibility. Anything's possible. So that's another option. I put out suggested targets, suggested stops, beta adjusted position sizes, and they are just that, suggestions, based on what I think the stock will do. PPLT, this one's been an active trade since I can't even remember. It's been a while. Somewhere back here, we bought it off this divergent low. So we hit our first target pretty quickly on that one. And again, I talked about it at the time. Fell just shy of the second target, and it was oversight on my part because I had that resistance line right here, and I haven't moved that at 83.49, and I must have got my numbers mixed up or something, because as I told you, I will never set a target above a resistance level I expect a reaction. I'll set it just below for this exact reason. What happened here is that everyone else saw that level. It was well defined. You can see the reactions here, gap right there. And so the sellers stepped in a bit early. And also keep in mind PPLT, although it does a pretty good job of tracking, it is an ETF or an ETF like GLD. And so Platinum Futures probably hit there, and I think they did hit their actual resistance level, but the futures trade virtually around the clock. So this one hit a high of 83.11. Had a target there, or the line was at 83.49. I take that back. I did set it. I'm sorry. I did set it a few 9 cents below, but not enough. Basically, it reversed shy of that level there. And we're still in the trade. It hasn't hit our stop yet, our max suggested stop. And I can tell you this, if you're in this one or looking to get in it, I'm not crazy about it, but there is some pretty nice support here. There was an area, we actually had an area of consolidation here. It broke out. It rallied, came back down, consolidated in that same area again, and just recently had a very impulsive breakout, and it came in and back tested right now. So I can tell you this. This is an objective level to go long. It is not my favorite. I wouldn't put this on as an active trade right now or trade setup if it wasn't already active. But the way I treat the official trade ideas on the site, for the most part, unless I see something very compelling in the chart, compelling enough for me to change my trading plan, I stick with my trading plan. If I can give you a tip in trading, it's have a plan, stick to your plan, your stops, your price targets, unless something compelling changes. Sometimes I'll extend my targets to the upside. Sometimes I'll rein a trade in, call it in early, close it out early before my final target or preferred targets hit if something changes. Likewise, sometimes I may modify my stops as well. As of now, we just, we barely missed that one. For all intents and purposes, that target was hit, not officially, but, it came close enough. And so now here's a stock that's now made almost a double bottom, and again, came back to support. So objective there, not one of my favorites at this point in time, because just what I'm seeing on the charts, but it may certainly work its way back up to this level again. So I'll leave it on as an active trade for now, unless anything changes or it hits a stop. All right, USO. Let me start with the chart of crude futures, because I've highlighted that recently. And I know a lot of you don't trade futures. You use DWT or USO or any one of the ETNs that track crude. But it's a pretty interesting chart. So we had, just to recap it again, I've covered it recently, quite a few updates on this in the trading room. So we had this smaller bearish rising wedge pattern here. You can see that. Negative divergence. Divergence is steeping there, and I just mentioned last week that it was an objective short on the break of this smaller wedge. So we've had a nice move down to try to measure that out for you. I'll have to move this trend line. That was 53.43 because I have to grab here and measure down. That's about a 3.7% drop since the breakdown. So certainly a profitable trade, especially on crude futures. Now, as of now, so what happened is we fell back down. The key levels on this chart that I have are this trading range here. I must have just moved a line around. We had this sideways trading range for a couple months right here, but the bottom of this range, that's what I'm focusing on. That's where we fell to, 50.46, big level. So we fell there today. That was an objective level to cover. That was the first target, I believe, that I had, the bottom of the range. And we bounced, and we came right up to this point here. We have resistance right around there. You can see support, resistance, some reactions. And so I think crude is an objective short here because we just ran up to that level. And you can short it here and maybe a half a position and add on a break here, or short a full position. Keep your stops relatively tight, maybe right above that 52.62-ish level. But I think we come on down, and just like the broad markets, because as I pointed out, crude is tracking largely in line, not completely. There are some days it moves the other way, but for the most part, it is tracking almost very closely, I should say, to the stock market, even bottom around the same time right here. So that's what I see on crude. And if it breaks that level, and just like the equity markets, that's where I was going, is we have this uptrend line off the lows, which has not been validated. The stock market hit that today on the futures, ES and NQ, I just showed you. So I expect the same on CL, come back in to this trend line to validate it, and that's where I think you'd close out the short, maybe even reverse it to a long. Let's look at USO real quick for you USO traders. Here's the story on USO. We took out that downtrend line similar to the one I have on CL. So very, well-defined, very steep downtrend line, bullish divergence, everything you like to see. You don't, you don't get this often. Positive divergence on the daily chart for USO, and it's rallied quite a bit since. However, you can see this recent area of consolidation. That's what I just showed you on the futures. I've been highlighting that recently. So you had this big fall in crude. It was one leg down, followed by a period of consolidation, followed by another leg down, kind of a lot like what the market did, the stock market. And so now we're challenging that level of consolidation right there. And you also have that 50-day EMA coming down. That may or may not come into play. Crude doesn't, that 50 EMA doesn't do the best job of defining the trend in crude. So, it also looks like, I'll tell you from this, and I just have to point out everything I see. I favor additional pullback to that trend line, but a bullish case can be made here that crude is bull flagging right there. And there's your flagpole. That would be the measured target. So even though the measured target is the distance of the flagpole added to the bottom of the flag there before it breaks out. But let's just say that 1214, that would be my max upside target if this happens to morph in or play out as a bull flag. But by that, what you'd want to see is an impulsive breakout. That's what happens with bull flags. You don't limp through there. You get an impulsive breakout, and then the trend continues with an explosive, strong uptrend like the one leading up to the formation of the flag. Okay, and here's cut and wood. I posted as trade ideas both in the trading room, and I even did a video. I like this one so much it made its way to the front page. There were so many components in here. Undoubtedly one of the most bullish sectors that I've seen this year. That's why I made it on the front page as a video. In fact, right before the video I posted here, it was 14 days ago, that CUT and ITB. CUT is the Timber and Forestry ETF, and ITB is a home construction. Will be likely added as official long trade ideas. Quite a few attractive growth and income trade ideas. That's what I really liked about it. And kicking myself for not, I did the video, and if you took them, great, but I should have got some of those out there as I intended to, because that section has been light, the growth and income trades. Those are people that are looking for dividend paying stocks, whether you need the income or you like the income because it cushions the downside when you have a stock that pays a dividend. And again, I went ahead and did the video on that, so you can reference that again. So there's ITB. We already know what happened. It went on, played out as expected, hit my first target there already. First and final target, I should say. I keep thinking because I had the potential. And cut, same story. I had it going up here, hitting first target, which it's already hit, and then coming on here to this potential second target. And let's get back to that chart now. And you can see where we're at right here. So from that point, it was somewhere down here. It already rallied. If I can grab it without moving the trend line, well, be a little high, but it already rallied about 7-8% or so. And you can see a momentum fueled overshoot. There it is. Came in, popped above my target here of 25.65, and now it's coming back in. So it's just a simple overshoot of resistance to come back on that level, momentum fueled overshoot. And we might be able to recycle in some of these names. If I see a nice decent pullback to support that's objective, I'll point that out. In fact, we'll go through a few right now, and there's a potential target. So I had in that video I flagged my favorites right here. I'm going to sort these by the flag, and we'll run through those real quick. WY, again, big gains in a lot of these stocks. Many of these is 13%, and you can just see how well they've been playing out. So there's WY, PKG, all explosive moves off those divergent lows. AVY, Avery Dennison, BMS, again, just, they were all back here. Many of these are high single digits to double digit gains so far. all of them moving up. Birds of a feather flock together. And I even mentioned in the video, some of these are different. Some of these are lumber products, some are office supplies, paper. This one just exploded. This was one of the ones I had highlighted, and it's up about 22, 23 or 4% since then. BCC, nice break out of the downtrend line. And again, they're a little extended. So the point of this video is to say, hey, maybe time to either take profits. I still think this sector looks good. So if you're a growth and income trader, trend trader, I wouldn't be worried about trying to game the pullback. Swing trader, certainly you might want to book some profits and jump back in. But a long-term trader or less active swing trader, they all look good. Break out of the downtrend line. Again, these are all the ones that were highlighted in the video. I don't know where I didn't have the target here on that one, but I looked like I had it flagged. Merck, MERC, WFT, and then the other one we had was wood, and there were a few more components in there that might not have been a component of the cut. RYN, UFS, already covered that one. A Canadian, I listed a couple of these for Canadian traders. This one was in this nice rising wedge pattern, broke out, and then boom, nice move up from wherever it was back then, probably 15 or so percent. And another Canadian one. And again, you can see the story is you're hitting a lot of these hit this resistance level, and it's not by coincidence. When the sector hit it, that's when a lot of these stocks hit it. So there's just want to update. And so some of these do look good on a pullback. A little more downside here in IFPTO for your Canadians. Again, this one may trade on the U.S. exchanges. I'm not sure if it does or not. I'd have to check that. I might have covered that in the video. CTT, look at that one, still going. So some of these are still going. Some have hit some resistance levels or targets where they're pulling back or consolidating. And again, the point is you might be able to recycle back into some of these if you booked profits, or if you're a longer term trader and you bought them for the dividend income, hold on to them. I think in the foreseeable future, they still look bullish to me. Any pullbacks withstanding. Okay, I want to roll into the internet content stocks next, but before I do that, because there's some similarities I see there to this TTM. There was a post, some threads in the trading room lately. I posted this in the trading room as a potential trade idea, and saying it needed to take out. Where are my levels at? Okay. Yeah, the TC2000 has really been buggy for me lately. A lot of my levels just vanish. These lines will move. But I mentioned there was a horizontal resistance level. I probably had it about right here. So at the top of this basing pattern, I said that and the downtrend line need to get taken out. And what happened? We popped above that this consolidation area here, but the downtrend line is not only the last of two to go, which is most important. Anytime I have a breakout or two levels, resistance levels in close proximity on a breakout, I wait till the latter of the two is taken out, because very often you can pop above the first one and then the second one comes into play, like this downtrend line here. But more importantly, this is also a more significant level. This downtrend line goes all the way back to early 2018, and so that needs to get taken out for this one to run. And if it does, and it may or may not. And again, the point I said in the trading room is there's a big difference between a trade setup and an actionable trade idea. Actionable trade ideas are already broken out or look good for whatever reason, look like objective entries. And a trade setup is just that. Sometimes it's set up in a bullish or bearish chart pattern. It looks like it's going to break down or could break down or break out, and they just never do. So an untriggered trade setup, it's not an active trade, and it never was. And that rolls into my next sector that I did a video on recently, really liked, is the internet content and information stocks. And so somebody pointed out today in the trading room, they took one of the trades within here. It was back testing a trend line, and so is the sector. So when I did the video recently, I think we were just inside this bullish falling wedge pattern. This was a measured target, by the way, where the pattern measures. Doesn't mean we're going to get there. I'll tell you what, if we're in a bull market with more new highs to come, we'll probably exceed this. If this is a bear market rally, we will probably fall shy of that. So keep that in mind, that when you're using measured targets for technical patterns, you have to kind of assess what kind of market conditions you're in, because bullish chart patterns tend to have a much higher failure rate. In other words, breakout, and maybe this will prove to be a failed breakout if this is really just a nasty bear market and we're just in the first counter trend rally. But if, let's just say, forget about bear market, bull market right now, this is a pretty bullish looking chart. Price action's been bullish lately. So this offers an objective long entry. Now, there is an ETF actually. I mentioned that after the video, I think under the comments. So let me do this. Internet content, and I did find a couple ETFs that track this content, and I should have had that ready for you now. They have these global content. There was certainly one that I came across. Let me pause it. Maybe I'm wrong. Can't find it. I thought there was one that would cover this basket of stocks. Pretty sure if I can find that, or maybe I'll go reference that post. I think I posted it in the comments section. Maybe I'm wrong. It might have been another sector. Either way, let's just rifle through some of these very quickly. Again, what I did at the time, I had a watch list and I flagged my favorites in the sector, which I'm doing right now. I'll go over, these are the same ones covered in that video. I'll just rifle through them real fast to kind of give you a big picture of what's going on in that sector. CCIH, it was at support. I mentioned objective if you can buy it down here. Aggressive, of course, low price, a $1 zone. And again, reference that video. I'm not going to go through all the details of each of these since I already covered these. FENG popped. It had a breakout, looked pretty impulsive, but we're now back testing a lot like the sector. And that's a common theme here. You know, birds of a feather flock together. These are components of the sector. There's another one, TrueCar, breakout, and it's coming back in a little. Not yet back testing. So these may offer objective long entries on these pullbacks and or back tests right after the breakout. If you take it on face value, it is. SOGO, that's the one a member posted in the trading room on the back test. So we're just, the way I have the trend line drawn, just a hair below it. I could tighten it up more, probably about right on that, right about a back test. Came in a little bit there, but see, you need to pop this 50. See this 50-day EMA, it's done a good job. That's another example of things you have to watch for. I can't recall if I covered it in the video. Stock is bearish below the 50. Broke out with an impulsive green candle to show you it was 50 was an important level, rallied, came back. There was a lot of volatility, a lot of downward momentum, so we sliced through there a little bit, but it tried to hold the 50, broke it, and once it broke it, and they could see that day, that big red candle right there, gave up the ghost. The following day, they said 50 was gone. I'm referring to the market participants. 50's been taken out, boom, gap down, never looked back. Tested it, failed. Almost tested there, and so what it's been doing the last 3 days is testing. So plain and simply put, this is your next buy point. You could certainly buy the back test right now, but until this one takes out the 50, it could continue to work its way down within this wedge for some time like this. So you want to see the sector hold that I just showed you on stockcharts.com or TC2000. It's IX2440 for this sector. Again, there's your level. Just look at the recent highs from last week. If it pops above there, the 50 will clearly be in the rearview mirror, and that's bullish, and this could take this stock all the way up. Again, I probably covered this in the video, and I don't know why I don't have it, but I would certainly have a first target right here about 650, not that 806. That would be my final target where I'd be exiting this trade if and when it got there. All right, some rest. Snap's one of my favorite. That's actually, I've had this one for several weeks now. Looking good, but it needs to get above 650. It's starting to take out the 50-day. Once it pops above 650, I think it comes up here to this trend line, and that's where I'm going to be out. MOXC, Moxian, low priced, again, covered it in the video, hasn't broken out yet. YY broke out, coming in back testing now. Also recently took out the 50, you can see, and back testing that as well. Needs to really pop above about 70 right there. You can see it kind of basing right here at this level. So once it pops above this area of consolidation, it should run, and this one might work its way all the way up there at about 88. IZEA, messy chart. WUBA, WUBA still needs to break out. Hasn't broken out yet. So again, just a trade setup until it breaks out. WB, Weibo Corp, back to support. 54.12-ish is pretty decent support. Broke out, but it's been back testing. So you can buy it here with a stop not too far below, or you can wait for it to break out of this recent consolidation range right there. A lot of price activity going on there. So maybe a pop above that 68.27, but that's quite a ways up there. So if you're bullish, you want to go long here. And you know what, a stock like this, if the sector has momentum, And as long as there's not problems with this company, and please keep in mind, guys, I haven't mentioned this yet in this video, but I will now, we are now heading into earnings season. I do not scrub out. Do my best to scrub the official trades for earnings, not these. So if you're going to take a trade, especially in a tech company, anything high flying, or any company nowadays, especially in this market, check for earnings. You don't want to take a breakout a day or two or a week before earnings, and then your stock misses and you get whacked. So if you're confident in the stock, you can position before earnings. But a lot of traders, swing traders, will close a position or at least avoid taking a breakout or a position right before they report. So with that being said, let's just move on. We have GRUB next. That one broke out, hit that first target of resistance 82.31 and pulled back. But so far looking good. The breakout stuck. In fact, if we look at it closely and examine this, we have, where did my string tools go? Here we go, drawing tool. We have a nice little clean breakout backtest, TA 101. Perfect technical analysis. Breakout backtest, rally up to my first target, resistance there 82.31, pull back. And it needs to break 82.31. It can run maybe up to 95. Again, market willing. A lot of these trades on the long side will largely depend on what the broad market's doing. As long as the broad market holds up and rallies, this sector will rally. But you probably want to keep an eye on QQQ, since QQQ is very tech heavy, or the NASDAQ 100. This is a technology subsector here, the internet and content information subsector, but it is part of the technology sector. So you want to make sure, I talk about a top-down approach I use. First you want to be bullish on, if I was intermediate term bearish, I'm just looking for a little pullback in the Qs right now. We got over a third of the way there today. I was looking for up to about a 3% pullback, 2-3%. We dropped over 1% today, so we're almost there. So, but intermediate term, I think we can still thrust higher. And if that's the case, you'll want to see QQQ cooperate, or else a lot of these trades I'm covering right now will not make it up there. I can just tell you that. They will be dragged down with forced selling pressure. All right, finally, SSTK moving up, certainly moving up since divergent low, steady gainer. IQ hasn't broken out, needs to. You can see 2 days last week, Thursday and Friday, tested, kissed that downtrend line to the penny, but came back in. So again, that just helps validate that as an important level. If it breaks out, that one can run. But again, it's a break or trade setup until and unless it breaks out. TZoo, Travel Zoo, looks to be flagging right here, right under support or resistance around 1124. Popped once, but it didn't hold it. And that's, there's no easy way around that. These volatile little tech stocks, sometimes you get these whipsaw signals. This is what you call whipsaw or false breakout. Intraday it popped and ran, but then closed back below that level. So we're consolidating here now. My guess is the next pop will probably be the real deal, but we'll see. Until it's taken out, resistance is resistance. And finally, a couple more here. Let's see. OPRA, OPRA Limited. I just highlighted, there wasn't a lot of price history. I just highlighted the divergent low. It's been moving. Not one of my favorite, only because I don't have a lot of chart history. Doesn't mean it can't run, just that I can't really make a solid case for it. Cena Corp, a couple false breakouts so far. I don't like that. That's not very healthy. We had a pretty well-defined downtrend line, false, failed breakout. It's also running into the 50 as well. You can see it's having a hard time with this 50-day EMA, which has been capping all the advances for a while. So it really needs to put the 50 and this trend line in the rearview mirror. And at this point now, you have to take out, since we had quite a few reactions there around 68.27. MARK, nice divergent low, been moving higher, nothing explosive, but it could continue higher. Coming up on the 50-day, you got to watch that. And if the 50 is taken out, maybe we move all the way up here. I should give you one more level to watch if you are going to trade this one right there. I see a gap. That gap was back tested there, about $2. And then EVER, again, not a lot of history. But I think it'll come up here at about 650 in this 50-day moving average before a meaningful reaction. That looks like a nice target there, and doesn't look like much, but we measure it out from where we're at today. and really no buy signal here other than the fact that I think if the sector continues up, this one will catch a sympathy bid. You're talking about 15-16% up into that 650 level and or that intersecting, it'll soon be intersecting 50-day moving average. Okay, long video. We'll just wrap it up here. There's been more and more buzz. I've had some inquiries on Palladium or PALL. PA is the futures, just symbol PA, or PALL if you want to trade the ETF. This is in this price channel. There's negative divergence right now, so it's been a heck of a run. You don't want to step in front of this. This one's pretty much a freight train to the upside right now, but we'll keep an eye on it. In fact, there might be a little minor uptrend line here that may trigger a sell signal to bring us down to this more significant uptrend line. So I'll update that one later if I see anything interesting. But I do want to point out it's had a strong run, but that run's probably about come to an end if it hasn't already, at least for a pullback trade. And I would target down here about 115.35, I think, is the minimum downside target for that one. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.